I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Robert Campbell. He puts out the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He's speaking to us from San Diego. By the way, how are you doing without the Chargers? I would horribly hate to lose my football team.
You know what? It's okay. I'm not a big fan. I wasn't a big fan of the Chargers. You know, they were okay, but I don't even care about football anymore. And it seems like much about it. And it seems like America's going that way. Viewership is down. Interest in sports, for some reason, Jim, is declining right now.
Well, blame television. They show so many commercials, they might slip a football game in.
Right. It lasts too long. I think there's got to be multiple reasons. I think people are busy. I think people are busy trying to survive.
Well, Americans truly are the hardest working people in the world. A survey just mentioned that. I watch Undercover Boss there, and everybody there seems to have 2 or 3 jobs to get by.
Exactly. I mean, there's no time to watch, NFL football games. I mean, you're working your second job.
Or your third.
It's living the dream, Jim.
Can people actually...
Especially here in California,
yeah.
In these high-priced markets. You wonder how anybody can afford to live here. You can't unless you bought a home and started building equity about 20 or 30 years ago. Otherwise, you're just screwed.
Also, they just did a study, Millennials, because of their high student loans, that's put off their house buying by 7 years. What's that?
I just read that this morning. I mean, exactly. Well, what do you expect? They got crappy jobs that, 50%, more than 50% of them owe more than 50 grand, right? I mean, and it's just so that they can't afford it. They can't afford it. They can barely, I read just a little while back that of kids aged between 25 and 35, 50% of them in the United States still live at home or are moving in and out of home right now. How incredible is that? I
was out of my parents' house 2 weeks after I turned 18.
Exactly. I mean, what are you gonna do with the chicks? You got to bring them somewhere. You're not going to bring them home to mom, at 11:30 at night, and you've both been drinking.
Well, you could always have the Italian solution. It's legal there to have sex in your car if people can't see you. So there are men who stand outside of parks with old newspapers and masking tape so you can tape up your car and meet your girlfriend.
Right. So I think people are losing. I think people are just having to work their asses off to get by. I think that's part of the explanation too.
And
so how about that? So let's talk about real estate. What do you want to talk about?
Well, we're just wondering how U.S. housing is doing right now, and have any markets peaked?
Well, let me answer the second question first. No markets have peaked, and the U.S. housing market right now is accelerating. It's gaining strength right now, Jim. And it's, what I've learned after, I've been publishing my timing letter for over 15 years now, and what I've learned is this: don't try to question markets or try to predict markets. Markets are going to whether you like it or not, markets are going to go where they want to go, going to go where they want to go. And you know where prices want to go right now? They want to go up. And they want to go up at a faster pace than they have been in the last 6 to 12 months. So, could this blow off in the next 6 months and and the bust starts, sure. I mean, could it go on another year? Sure. Another 2 years? Sure. Hey, during the bubble period, Jim, from 02 to 06, housing prices tripled in California. You think most smart people would bail out after a doubling, right?
But you still need a place to live.
The people that stayed on for the whole thing, they tripled their money. So I have learned to respect markets. I don't try to argue with them. The market is always right. And I'm just saying, Jim, that nobody knows. I mean, look at the stock market. Look at the U.S. stock market. That's at record highs. And that's extremely highly valued. Who knows how high this crap's going?
Is it good for people to think about protecting themselves, or because the U.S. stock market has been climbing 8-9 years, people get the impression this thing will never stop?
This is the biggest bull market ever, or close to it. Exactly. And it's going to end. And you know what it makes me think, Jim? Both on the real estate and stock market side, this is all based on cheap money, dished out by the Federal Reserve. That's what it's driven by. Cheap money. Low interest rates. Cheap money. Debt. It's all driven by debt. And that's what scares me. I mean, I'm still long for all of our listeners in here. I mean, 22 cities in the United States that I follow are still in primary uptrends. And the prices are speeding up, and many of them, prices in the U.S. have already exceeded the bubble, Jim. The bubble period during 2006 were higher. And now we're accelerating from that old peak. Heck, I couldn't have ever imagined they would have got back to the old peak that quick, because that was such a blow-off afterward. I think this next downturn could be really as bad.
We'll have more with Robert Campbell right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with Robert Campbell. Bob, are foreign buyers a factor in a hot U.S. housing market?
Not that I'm aware of. I keep hearing rumors of it. I mean, I'm sure it's, if the money is going to where the assets are performing best, I wouldn't be surprised that foreign money's coming into the United States, for that reason. So but in general, I mean, I don't know how dependent it is on that money, because I can't tell how much of it, how big it is, and it's hard to really verify, Jim. But I'm sure it's had an impact. Any source, increased source of demand is going to drive housing prices higher. But this is quite a bull market we have right here.
Well, Greater Vancouver, they passed a foreign buyer tax. Ontario in Canada has a foreign buyer tax. Where else can they take their money? Maybe Seattle or to New York?
And it depends on how much they're moving, I mean, how much of that money is really moving. If they're trying to move it to the United States, to get it out of like Europe or something, that it's a safer place, or Japan or China. And you know what, I don't know what's going on in those economies any better than anybody else, and most people don't know either. But I think all in all, most smart money, big money, people that have a lot of money would rather have their money in the United States than somewhere else.
Is the price of U.S. real estate rising due to the declining U.S. dollar?
No, not really. It doesn't have an impact on that. The reason it's rising to a large degree is because inventory is so low. It's incredibly low. So, I mean, what's happening now is we've never seen this. You know, every real estate cycle has different dynamics. This one has the dynamics. Yeah, the demand isn't as high as it was at the peak, and the number of buyers are still, you know, around, you know, 5 million or so, and at the peak they were around 7, so the demand is off, but what's really off is the supply. Nobody's selling their home. I mean, so you have all this demand, and everybody's, just because there's limited supply, they're bidding the prices up like crazy.
Do you think they were put off building new homes because they weren't sure of the interest rates?
No, I think the reason that they stopped, they haven't been producing as many new homes is, you know, about 5 years ago, the government, all the fees that a home builder had to absorb to build a new house, increased by $35,000 a house, Jim, and that's that's why new homes are so expensive. I mean, I just think they've outpriced themselves with fees and stuff like that. Government fees.
Yeah, we've seen the same thing happen in Vancouver. The mayor of Vancouver wants to ban natural gas. So you don't have a nice natural gas fireplace. It's impacting the company here that makes natural gas fireplaces. And of course, natural gas cooks your food the best. You're not allowed to have a round doorknob in Vancouver. It has to be a handle in case you get arthritis. So I'm told that that's one of the reasons here where housing prices, that can add another $100,000 to your house.
Oh yeah, I remember reading that about 2 or 3 or 4 years ago. That $35,000, and these are new government fees that the governments have put on because they're all broke and they can't pay their pensions, right?
Well, of course they have to look after their pension.
Those are the ones I'm talking about. Right. I mean, they're just going to tax everybody to death until, the public sector, public pensions in general in the U.S., they're between 30 and 35% underfunded going forward, which is a big, big number. And, all of a sudden people are starting to talk about that, how to deal with that. How are you going to deal with that? You're just going to keep taxing people, and, I mean, that's not going to work. I'll tell you that's not going to work because it's going to take a lot of money to make up the difference between what they're paying out and what they have. So these are really interesting times. See, that's the government bubble. You call that the government bubble. It's a bubble in unfunded, unpayable promises that they've made. That's the big one, Jim. That's the one I'm interested to see how it plays out. Because the numbers are huge. And is it going to impact real estate? Of course it is. It's going to impact real estate big way. I mean, it could have a dramatic impact on the economy and the markets. How they're going to fund that difference? Are they going to print money? That's what they're going to do. They're going to print money.
Which, of course, means it's worth less than it is now.
Yeah, you just devalue the currency. Yeah, that's all great. People are losing ground already. The dollar, the purchasing power of the dollar is falling, and wages are flat to down for the last 30 years and things like that. The standard of living of most people in the United States is declining, Jim.
We'll have more with Robert Campbell right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Bob Campbell. Bob, what happens when people can no longer afford all these government fees? Will we face, even though you say there's a lack of inventory right now, will people just give up hope of ever owning a home and just rent for the rest of their lives or live in a tent in the forest.
No, and they won't give it, that dream's not going to die, to any significant degree. What's going to happen, the market, prices will just correct. They'll revert back to normal so that people can afford to buy houses again because, the consequences of that where people get depressed and can't afford a home or something like that, up goes civil unrest, Jim. Civil unrest and then maybe even a friggin' revolution. If only rich people own houses, well, and that's the kind of the way it is. If you own a house, you're rich. If you don't, you're not.
Do you think governments are aware how much of the GDP in both Canada and the U.S. are wrapped up in real estate? And when you mess with that market with government regulations, you're messing with your economy in ways you can't understand.
Yeah, that's a excellent point you're making right there because real estate touches everybody's life. Real estate touches, about 70% of all Americans own a home, so that touches all of them. And versus the stock market, the wealthy people own the stock market, right? Like the top 1% own 60% of the stock market, so that doesn't matter as much. So, hey, I think the government and the Federal Reserve have a hell of a lot vested in keeping this debt-driven party going, Jim.
Will they finally get the right economics in to understand that really a home is a forced savings plan so that you actually have equity to support your retirement?
They don't even think that, you're assuming that they care about this. No, they don't care about that. The only thing they care about is keeping asset values up so that people have money, have a wealth feeling. They stay in office. Maybe they'll spend a little more money than they would otherwise, because the economy sure isn't strong. It's weakening. The economy's really, really weak. 2% or 1.5% economic growth. It's been falling. That is not strong growth. And incomes are essentially lower than they were in 20, 30, 40 years ago. So it's that general discord in America that made Donald Trump president, Jim.
And what has he done to help address that discord?
What has he done?
Yes.
Not much. Do you have any idea what a war is going on in the United States between the liberals and the conservatives? It's unbelievable. Our country's going to end up, I'd say there's a 50% chance that we end up in revolution in the next 5 years. People hate each other. Don't ever say in the United States that you're for Donald Trump. They'll beat you up.
Well, he says he's so popular. Why would they do that?
Well, because the resistance movement. It's an underground resistance movement, Jim. Hey, I don't even want to talk about that. I don't even follow that stuff. I hate both sides. One of my favorite ways to look at it is that, that whether it's the Gambino family or the Genoveses, they're both criminal organizations.
What do you feel a homeowner or a prospective homeowner should be doing right now if they want to get into the market?
I think what they should do is this. If you want to get in the market and you can afford it, good. The home you can live in, regardless if it's going to fall 40%, 35%, who knows what percent, during the next downturn. Go ahead and buy it. Or if you're saying, hey, if I bought in late and I can see that I made a mistake and I bought near the top, based on your historically reliable indicators, Bob, what should I do? I'd just say sell it and cut your losses and run, Jim. Are people willing to do that? Maybe depending if it goes on another 6 months or a year, you'll cover that, if it goes on another year, you'll cover that 7-8% VIG for the commissions and the closing costs, and you'll break even. But even if you had to take a small loss, I'd rather take a $5,000 loss on it than take a $50,000 loss on the downturn. You know what I mean? Because I'd rather be buying it back at 30% under its old price.
Do you see any point right now, any length of time where markets like San Francisco will peak and start to decline? Or is San Fran a lot like Vancouver? So many people want to live there and work there. Trying to get them out once they're in is nearly impossible.
No, San Francisco is different than Vancouver. Just based on the historical patterns. You go back 40 years, San Francisco's boom and bust. I mean, been some pretty significant boom and bust, even though that's been one of the best places in the United States to own real estate for in the last 30 years. But Vancouver hasn't had those corrections. So, San Francisco, heck, it was super overpriced when it was at 1.2 million was the median price. And that was about, oh my goodness, I mean, let's just say a year and a half ago or something like that. Jim, now it's 1.5 and it's still going up. And prices are accelerating. That's why I say, that you have to respect what the market's doing. The market wants to go up right now, so ride it.
What makes Vancouver different than San Fran?
I don't know. I've never been to Vancouver. And I don't know what the appeal is. All my friends tell me, Vancouver's just a great place. Whistler's a great place. And so I know it's a great place. I mean, to me, it's too friggin' cold. I'm not going to move to Vancouver. It's too cold.
72 degrees in the summer and 50 degrees in the winter is too cold?
Yes.
That's because you live in San Diego.
Oh, it's got to be lower than that. It snows.
On the mountains.
Well, look how north it is. But it gets cold up there and it rains all the time, right?
In the winter?
How many inches of rain do you guys get per year? Everybody that's listening, I'm from San Diego, so I'm a beach boy. I mean, I love the beach. I love it warm and hot and near the ocean. So how many inches of rain you get up there?
Oh, I don't know, feet. Measure it in feet.
Oh, whatever. I mean,
yeah.
I mean, you're so far north. I mean, you're not that far away from the North Pole.
Only if you live in San Diego. We have a very moderate climate where most of the year you don't need a jacket. You might need a jacket for the rain. We just had the driest summer ever. 4 months without any rain at all.
It's kind of it's unusual weather like that, more favorable than, I know, because, I mean, it gets really cold in Canada, right?
The rest of Canada, Victoria and Vancouver are the exceptions. We have palm trees on our beach.
Is the ocean warm up there for some reason? Is that
yes,
what
it
keeps
is.
It warm?
Yes, we have a very warm ocean.
Wow, I didn't know that.
Oh, yeah.
I guess anytime I go north, I like going south. You go south, it gets warmer. You go north. Hey, I lived in San Francisco for 2.5 years, Jim, and I'll tell you, I mean, I didn't like it because it was too cold there.
Oh, no, well, I remember it. Mark Twain said the coldest winter he ever spent was a summer in San Francisco. Yeah. Vancouver is not like that. Our temperatures this summer were in the 90s. And it just cooled down.
Then
now.
It sounds wonderful. Then right behind Hawaii, Vancouver's going to be in third place for my possible future vacation home.
I know we keep getting picked as the most livable city in the world, somewhere in the top 3. Sydney's in there. Yes, I can't believe you haven't been to Vancouver. I have friends in San Francisco and L.A. who were shocked that they had to go through customs when they were on I-5 coming up north to come visit. Did you know that there's a customs station? Yeah, it's a different country.
Right.
Oh, they didn't know. But just come here once and you'll understand why people want to come here.
Yeah,
I can't explain the mountains, the buildings.
In fact, up there, I've been in Seattle and stuff. I've been in Seattle, during September and October, and the weather clears up. It gets real nice. It gets warm and stuff. It gets in the 80s and stuff like that, and it's beautiful. Hey, my dad and I were up there in July. My nanny we took a 15-day road trip to Baton, because that's where Dad was born and raised, and we were in Seattle-Tacoma area for 2 straight weeks. Not once did we see Mount Rainier, Jim.
Oh, because of the forest fire smoke.
Smoke? That wasn't a focus, just the friggin' rain clouds everywhere.
Oh, no, this year we had forest fire smoke come in.
Oh.
Yeah.
But I'm just telling you what the weather's like.
Well, I'll tell you, though,
I know what
we consider Seattle to be a pale imitation of Vancouver.
Hey,
Seattle's nice.
I like warm climates. I always tell people, I said, if I'm ever homeless, I'm moving to Hawaii.
States have been sending their homeless to Hawaii, the most expensive state to live in.
Exactly. I read that, too. I've known that a long time. Real estate in Hawaii is incredibly high. That, they don't compare Honolulu with San Francisco in this group because there's only like 500,000 people live there, so they don't consider it a major city. But Honolulu is the most expensive major city based on population in the United States.
Yes, and the real estate reflects that.
And the real estate reflects that. And I'll tell you, go move. Hawaii is I love Hawaii. But I'll tell you, you go over there, You got to be. I always thought that's where I wanted my second home. But you got to really have some extra money and be pretty affluent, because everything's really expensive over there, Jim. Food, energy. The cost of living is something like 60%. It's the highest in the United States by far. And the real estate's expensive. You got to have some dough, unless you're just. And you know, I've read that the poverty rate in Hawaii is the highest in the country too. Those Hawaiians don't have any money. They pass those houses on from one family to another over the years. But you know, they don't own the big estates, you know, on the Big Island like Michael Dell, and you know, that have those $10 million places right on the ocean. No, but I mean, but it's really expensive. But I love it. I love this. I love it.
Everything's imported, and Hawaii, where Spam is the national food.
I know. People are poor. People are poor. But if you're homeless, hey, did you know in Hawaii the weather is so moderate that when you build a new house, you do not have to put a heating system in it?
Well, exactly. Last year they had a cold wave where temperatures went down to 65. Nobody has a jacket or a sweater there.
Right. I've been cold in Hawaii twice. I remember that. I was out in the ocean once. You know, because all of a sudden it's always in the low 80s. And ocean, we had to go get our towels and jackets. And I mean, all of a sudden we were out there, and I swear to God, it got to be like 65 degrees in the wind. So it can happen.
The only time I've been cold in Hawaii is just wearing my swim trunks on a midnight run for beer in an open Jeep. That's
what I like. Because you really don't need, you know, a lot of things. You don't certainly need any clothing over there.
Yeah, the police insist on it.
I really like it. I like the people too. I like because they're real casual. If you respect them, boy, I mean, I get along with them.
Robert, any advice for people worried about holding on to their home if mortgage rates do start to climb rapidly?
Well, if they do start to climb rapidly, the price of housing is going to fall rapidly, because this is a low interest rate environment. You know, that's what's driven, you know, most of this money, whether it's qualifying for a mortgage to buy a home, or whether it's the fact that people are buying rentals because they can't get any return on their money anywhere else, and they're going to real estate and stocks looking for price appreciation. But I would say you got to really know yourself here, ladies and gentlemen. I mean, when this next downturn comes, it's going to revert back to old means, and I think nationally it's going to be right around the 35% mark, and that's a big decline. The only decline that's ever been that bad before was after the bubble burst. And you really don't know. You don't know how far prices are going to fall. They may fall 20%, but they may fall 50%. You just don't know. So, but you know, staying away from bad markets is a way to invest that I've always liked. I mean, avoiding bad markets. I mean, because follow the trends. When an asset class is going up, you know, be invested. When it's going down, get out of it. Yeah, is that a taxable event? Yes, it is. But you sure avoid the pain and misery and suffering of losing money, and especially when you don't know how far prices are going to fall. And ever since 2000, you know, Federal Reserve is trying to stop cyclical behavior, and so everything just keeps going up and up. And all they've really done is that they've made the cycles more extreme. That's why I think this next downturn is going to be a lot nastier than people even imagine now.
Is any market immune?
No. Nothing's immune. I mean, all you can do is try to be in the right asset classes. Like, yeah, the cash market. I mean, you're talking about an asset market? No, frankly, what I think is that, and I'm going to save this for our next time we talk, because I'm holding a seminar in San Diego on the 14th of October, and I'm going to be presenting some new information to some people on an investment that I've researched and studied that I think is going to be a great place for money during the next 1 to 2 to 5 years. But I'm not going to tell you what it is. I'll tell you after that, because a lot of people will hear this that are followers of mine, and I want them to come to the seminar to hear it because I think it's that good. And people know I don't have those crummy little ideas. This is a big idea. So we'll see. But I don't like to predict. I'm more of a trend follower, but I think looking at things on a cyclical basis, and you know, studying history is a good way to good way to see into the future. I think this investment is going to do quite well.
Robert, how can people find out more about the Campbell Real Estate Timing Letter?
Go to realestatetiming.com, just like it sounds, realestatetiming.com. And you can buy my book that shows you exactly how I time market. I don't hold anything back. It's a how-to book all the way. You can subscribe to my timing letter, and I'll give you the book for free. Or maybe if you need some consulting and I have a blog on there. I give away free information on the blog. I put at least one blog post a month on. Read my blog, and you can see what I'm thinking about at the time. I'm starting to share my ideas, to show people what they're missing if they don't subscribe to me.
Bob, thank you so much for chatting with us.
Oh, it's always good, Jim, and that look forward to doing it again in a couple of months.
We've been speaking with Robert Campbell, publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He was speaking to us from sunny and wonderful San Diego.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.